The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the February 24th, otherwise known as the wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. But much more important than that, that's this. During this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in, 877-927-6648. If you can't dial in, we've got you covered there, too. Go ahead and send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question, of course, in our Tiger's Den. Well, any ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, all the indices trading to the upside. You've got the Dow up 320 points, the S&P 29. NASDAQ just turned slightly negative. Russell's up 43, semis up 44, Tranny's 245. Spot volatility trading out at 22.24 below its 50-day exponential moving average. Gold's off $10, silver's up 4 pennies. Light sweet crude $1.25 to the upside, leading the charge to the upside. It is MicroStrategy, $100 and change, up nearly 15%. Booking holding $71, 3%. Tesla $28, 4%. Pra Health Sciences, 17% or $22 the upside. It's Mercado Libre. That's down 64. Buckarooni's off 3.5%. Amazon $46 the downside. CoStar Group 31. Icon PLC down 10% or $20. Square off 17, $18 down about 7%. So plenty to look at. Of course, I want to look at what you want to look at. And there are no requests. There's no callers. There's no emails. And there's no requests in the Tiger's Den. So we're going to go take a spin around the globe here. Well, not really around the globe, but we're going to go take a look at a few charts. Let's start by taking a look at a short-term, 30-minute time frame charts out here. If we just take a look at trends, now you've got the ES Mini, the upper left, the NQ, the upper right, the Dow, the lower left, and the Russell 2000, the lower right. What you see here, I've got Stevie's automated trend line tools out here, and you're just going to see rising trend lines with the exception of the NQ. The NQ is the culprit here. I would assume at this stage here, if the NQ can take out these resistance levels, at least on its 30-minute basis, well, it would set up an A to B equals CD to the upside. So upside potential, if price can take out the trend line areas, right now the A to B equals CD pattern would suggest something along the lines of a move to 13,496, 13,642. Now, that is not the call that we are making at 1:09 in the afternoon. We are not making that call because price is not trading above its descending trend line. It's just consolidating or trading in between its rising and descending trend lines area. So it's really the NQ from a short-term standpoint that we should focus on because it seems like, directionally speaking, the market is taking its Qs or its Ps and Qs from the NQ out there. So that's on a short-term basis. We go take a look at the daily, longer-term basis out here, daily time frame. What we're going to focus on is, well, let's start with the ES Mini, upper left-hand side. And it still has its neutral. The signal is neutral. Why is that? Because this generated a TD9 count top on February 16th. That high is the key high, 39.59.25. You close above that, well, that tells you about a strong momentum move to the upside. Inside the NQ out here, the NQ's got a top. The question is, did it bottom yesterday? But it has a top, and price must close above 13,950 to negate its topping signal. Price is trading inside its daily profile, so its next move to the upside, 13,337. But we looked at that 30-minute time frame chart, and we saw that it was very clear the descending trend line resistance to be paying attention to if, in fact, the NQ is going to move higher. If the NQ is going to move higher, it's going to be pulled higher by the Dow. Why is that? Well, if you take a look at the Dow Equity Future Contract, as we speak right now, and it will be dependent upon the close. And the close that you're looking for is, does it close above or below 31,662? A close above, and that will have negated its TD9 count topping pattern above the top of its profile. And that would be suggesting what? Excellent question. I am glad you asked. What it would then be suggesting to you and I is that it's ready to continue on to make its measured move, its consolidation measured move. You can see the consolidation pattern in the upper left-hand panel, but I've just simply moved that over to the weekly time frame chart. Much easier to see the consolidation as well as the consolidation measured move price projection, which would take us up into the 32,220-ish type area. Don't hold me to the tick there, but that's really the signal as we speak right now. And again, the confirmation of that is going to be a close above I gave you the number out there, so you wrote that down on a pad of paper, and I know that's the case. Now let's go take a look at the other two equity future contracts out here. We were the other one, that's the Russell 2000. What's the Russell 2000 doing? Just consolidating with inside its bearish structure daily profile. So the only real breakout, and it also has a top in place. So the only real breakout that's going on is the Dow. Now, when you see that take place, I always ask myself the question, so because global capital, what global capital wants is large caps. It wants the Dow. It wants the liquidity. It needs that liquidity out there. And so we should see the Dow begin to outperform. Well, when we see the Dow outperform, that's when it begs the question, is global capital beginning to make its way onto our shores? Well, how do we know that? Well, you and I, we get to track this. We get to see how any instrument that we want to go take a look at trades in multiple currencies. In this case here, I'm just taking a look at the four dominant currencies: the US dollar, the euro, the Japanese yen, and the Great British Pound. Of course, those three currencies represent a sizable portion of the US dollar index, but we still want to see how is an instrument trading in all of those currencies. What we look at there is the rate of change. The rate of change on this set of charts out here, this set of tables, is from the beginning of the year, the very first trading day of the year. We're now in day 36 of trading out here. If there's going to be a concentration of capital in the U.S., it'll stick out. It is not sticking out as we speak right now. We've only seen since the beginning of the year inside the Dow a 4% rate of change in U.S. dollars, 5% in terms of euros, 8% in terms of yen, and only 1% in terms of pounds. It'll be strikingly clear. For example, strikingly clear right now would be taking a look at light sweet crude. Light sweet crude is the winner chicken dinner with the exception of Bitcoin. But if we take a look at light sweet crude, up 30%, really almost across the board, with the exception of in pounds, which is up 25.5% out there. So still a big move. Emerging markets have performed fairly well out there. But in the case of a rising dollar, they will get crushed. Asia is performing better than the U.S. So is capital flowing? I don't see a concentration of capital anywhere. But it is what it is. And the Dow Equity Future Contract is trading above all resistance. And therefore, its signal as we speak right now, depending on its close, is a move up to 32,220 or thereabouts. We'll be right back. Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which
led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's up 351, S&P 34. Our first request comes in from our Tigers Den. You too can send in a request. You can send me an email, steve@tfnn.com, or you can give us a call at 877-927-6648. But we're going to go take a look at Farfetch Limited, FTCH. I guess they're a digital platform for luxury goods dealers out there. I looked at their income statement, and they have no income. They just have losses that continue to increase substantially. But you'd never know by taking a look at their stock chart, because it's near its all-time high that actually took place just a few days ago. Yeah, just a few days ago. Let's go take a look at it, try to get a feel for what it is doing out here. And the question is it time to get into a long position? So let's go start by taking a look at the daily time frame. As we take a look at the daily time frame, Farfetch generated a Rhodes momentum indicator top a couple of days ago. And that took price all the way back to support, which held. That was the bottom of its profile, so 58.20. So it's neutral right now, Fletch. I would say, it was Tarpon 2. I'm sorry. It was Tarpon 2 that had asked about this. Your better buy with price below the oscillator and change line is back at the bottom of that profile, 58.20 area. Let's go take a look at the weekly. Let's go see what other signals we might have from Farfetch, FTCH. Right now it has a Rhodes momentum indicator top on the weekly. So depending upon its close, what I mean by that, if we see a close below around 68.89, I apologize for having to say around, but I do, because that's the oscillator and change line. As price moves up and down, that number's going to change, by pennies or what have you. But if price, it's only Wednesday, on Friday, closes below that, then, the signal there, TARP would be maybe you're going to get another shot at the bottom of that daily profile. On a monthly time frame, well, not enough data realistically, but let's take the data we do have. It's bullish. It's bullish from the standpoint that price is trading above its TD9 count high. The problem is it's only February 24th, and I don't know where price is going to be at the end of this month. And so it may not negate the TD9 count pattern. Let's look at a 30-minute chart out here, see if there's any kind of signals out there. Man, that was one big swift move down lower. Yesterday, that's after generating a Rhodes momentum indicator top, wave number 7 out there. What else do I have here? It looks like price might run up to 68.76. So the question becomes, Tarpon 2, do you want to chase this thing? I'd wait for it to prove itself to us, and to prove itself to us, it need to close above 68.76 on a 30-minute time frame out there. And really, to get to its bullish ways, it needs to close above its oscillator and change line at 69.57. So the signal right now is neutral. And if we were looking to buy some kind of a bottom, that bottom pattern passed us by yesterday as one potential. I'd sit by and wait a little bit on this, especially because of the large run that it's had. So I hope that helps you out. Thank you for being the first one to put in a request to go take a look at an instrument. We've got another request out here, this one from John of the Tiger's Den. John wants to look at the New York Stock Exchange, the NYSE. So let's begin by looking at the New York Stock Exchange. Let me do this here. NYA, get this going on my other charts. Okay. So here we're just simply going to begin with trying to understand who's in charge of the New York Stock Exchange at the moment. And the answer to that question is sellers. Yeah, I know we're at a new all-time high as we speak right now, but if we take a look at the oscillator, the advanced decline oscillator line, it is below zero. And when it remains below zero, granted there are a bunch of closed-end bond funds in here, so those are certainly impacting that. But still, nonetheless, when you close below zero, and it's been below zero for 4 or 5 days out here, that is suggesting to you and I that sellers are the ones that are in control. And that's a signal we have as of 1:22 in the afternoon. Now, we have a divergence because we have a descending trend line in that advanced decline oscillator, and we have a rising trend line with regard to price inside the New York Stock Exchange. I don't have that drawn in here, but you can see that, or you should be able to see that on your screen out there. So first, with regard to the NYSE, its signal is bearish, or at least that sellers are in control. Now let's go take a look at its other charts out here. Let's look at the daily time frame. And on the daily time frame, we know that right now price is trading above a TD9 count pattern. That TD9 count high took place on February 16th. That high was 15,483. We're at 15,538. If we see a close above 15,483.20 today, regardless if sellers are in control or not, this is suggesting a strong upward momentum move. Do not pay attention to the profiles on here, the little black dashed lines. Just don't pay attention to them. I'm asking you to not pay attention to them. But you can pay attention to them if you want. Price is moving higher, doing less relative energy. I've got wave number 7 as one count that's out there, but that can continue on. So the daily is giving us a bullish message and only just a caution sign. We go take a look at the weekly time frame chart out here. What do we see on the weekly? On the weekly time frame chart, let's get this populated. It's bullish. And it's bullish. It bottomed back in March of last year with a TD9 count bottom. Then it goes and makes another TD9 count up in September. This is a weekly chart. And it just trades sideways for a couple of months. Gets above that TD9 count high, off to the races. Forms another TD9 count that really just generated a 3-week move lower and sideways, and that's been off to the races. The move lower yesterday or Monday inside the New York Stock Exchange was nothing more than a test of the oscillator and change line. That's currently printed at 51.55. So regardless of the market breadth aspect of this chart is also bullish. On a monthly time frame, I know the question was price projections out there, and we'll eventually get to that, but I want to see what's going on pattern-wise inside the New York Stock Exchange. Well, on a monthly basis, we are, it looks like, going to form bar number 8 of a TD9 count. We know that bars 8 and 9, the bar following 9, can be the top. That says that maybe there's not a top for 2 more months. This is February, March, April. So we wouldn't be looking at a potential top in the New York Stock Exchange until the April-May timeframe. Yearly basis, everything is bullish or traded above last year's close out there. So now how are we going to generate some type of price projections? How are we going to do that? That's a great question. I don't have the answer just yet, But what we're going to do is I'm going to go to my 3 time frame charts. I'm going to go ahead and put the New York Stock Exchange out here. And the reason I'm going to do that is I'm going to see which one maybe shows the so how do I do that here? I go to that should do it. Okay. So just, I think John, he's asking for price projections. I'd have to go with the easiest one would be taking a look at expansions of swing points, major set of swing points. And it's very clear that we have that here. So let's go take a look at what those Fibonacci expansions are. This is from the high in January of 2020 down to the low in March of 2020. And so the next price projection area, John, is going to be the 1.272 expansion, and that's at 15,684. If price is able to close above that, then it would suggest to move up to 17,593. So that's one way to generate a price target for where the New York Stock Exchange is headed to. Let's see if there's anything else that we can come up with here. There's really not. I would hesitate to draw in an A to B equals CD pattern. If I were going to draw one, it would look like this for the NYSE. You start obviously with the March lows as the A point. I would look at the high on June 8th as the B point and the C point down on June 15th. 1-to-1 gets us up to 15,697. So price targets 15,697 to 15,684. We'll be right back.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we're going to take a look at ticker symbol AYRO. The company's name is AYRO. So I don't know how you pronounce that. It doesn't really matter. The question is, this individual is looking for a long entry point. When I take a look at these charts out here, what really stands out to me is a consolidation pattern. And the consolidation pattern that I would draw in, it's not always perfect, but the consolidation pattern that I would draw in looks something like this, give or take. I'm not going to be exact with regard to my drawing out here, but you can pretty much see the consolidation. And it's a consolidation because it's very clear to us. First, there's resistance at 1060, the top of its weekly profile. We can see 2 attempts to get up to that level. So that sets up our top consolidation general area. And then we can see a number of times where price stopped in around the 550-ish type area out there and setting up the bottom of our consolidation. So if this isn't a consolidation pattern, the ideal place to buy is at the bottom of the consolidation. And the bottom of the consolidation actually took place yesterday on a daily time frame. Now, when looking at these charts here, our TAS market profiles, would have been tough to have bought that because price was below support, the bottom of a daily profile, inside the range of its weekly profile. And the monthly just simply isn't any help to us. However, what we got to do or should do is go take a look at our other charts out here. So let's go look at our white background charts for ticker symbol AYRO. And is there anything on here that would have assisted with an entry point into that consolidation pattern? And lo and behold, we can see that its actual breakout area was at 683. So the mere fact that price was trading below the bottom of the daily profile, certainly a level of support, it was trading right down into its breakout level. Now, it closed just slightly below that. And when you close below it, the question is, we don't use one bar's close above resistance or below support. You need conviction. You need proof. One-hit wonders, they happen all the time. Well, now you're up above it. Do you get into this trade now? You'd have to go to a 30-minute time frame. So if what we assume here is that the consolidation is the pattern out here, and we disregard, many other things. And if you can't bust them to the downside, it'll try to bust them again to the upside. So that's the theory that we would be using here. What we'd look for in a 30-minute time frame is some type of bottoming pattern up there. Now, yesterday, we didn't have that in the 30-minute time frame. We can see the spike lower, the gap to the downside, but no bottoming signal at that stage. There's a TD9 count pattern that formed about an hour ago. And this would suggest that price might pull back to the 707, 723. And if price were to get below that, we don't have any indication that would take place in 653. That would be your entry point. Another possible entry point, if you're going to try to jump on board this train here, would be a close above 817. I realize you'd be paying up for that, but that would be proof that there is likely a change in trend. That's a TD9 breakdown level for the 30-minute time frame. I'll quickly look to see if there's any other significant areas on these short-term time frame charts, anything that you could use. And the other thing you could use here on the 130-minute time frame, a close above 785 ought to get you up to 884. But back to the original question, first with regard to the pattern, what pattern is in play for AYRO? It most certainly is that consolidation pattern out there. And ideally, you buy the bottom of the consolidation, you sell the top of the consolidation. So I hope that helps you out with regard to ticker symbol AYRO. We had a request to go take a look at CRM. My apology, I don't recall who was asking for which of these reviews out there. It doesn't matter. What matters is the fact that I get to it. So let's go take a look at this is a Salesforce Innovation. What I don't know is what the question was, meaning was there a request to go take a look at an entry, an exit, or what have you. Doesn't matter. We're just going to analyze the chart. And here when we take a look at Salesforce Innovation, right now it's back inside a daily profile, and this may be targeting 242.59. 242.59 is resistance. The pullback this week has been a test of the top of the weekly profile, old resistance that so far has proven to be support. And the same thing took place last month and the month before on a monthly basis for CRM. Price pulled back, test the top of its monthly profile. So it's got support at those levels. Those levels are 216.82 and 230.31. Let's go look at my other daily and then the 30-minute time frame chart for Salesforce Innovation. On the daily basis, what do we have? Really not much. Now here we have a TD9 breakdown level, 229.19. It looks like yesterday's session, just like the weekly profile, out here, that old resistance, that 229.19 level, has become support. The confirmation of that would be a close above 242.60, and if you get that, that's going to suggest a move up to the 262.52 level. On a 30-minute time frame, what is this doing out here? Not much, nothing to assist us with whether to get in or whether to get out. So it does look like, on a daily basis, Salesforce Innovation generated a nice Rhodes Momentum Indicator bottom. That was back in January. You can see that signal. You can see the bullish reversal candle. And now if price can get back above 242.60, it'll be on its merry way. What you know at this stage of the game is key levels of support have held. Only closes below those areas. We're going to call it the 216.82, or that spells some kind of problem for Salesforce Innovation. So hope that helps you out. Thanks so much for writing in. We have another request from our YouTubers out here, and the ticker symbol is CCIV. Bada bing, bada boom, I believe, is the requester out here, and that's Churchill Capital, which gapped to the downside yesterday. And so this happens to be one of those instruments. There's not a lot of trading data here, but the trading data that is here, bada bing, bada boom, it was the 33.49 level. And that happens to be both the bottom of the profile and the center of the profile. In other words, mucho grande, strong support, which yesterday it acted as strong support, but is a big gap to the downside and big volume. It held. Right now, price is trading below that. That's 33.49. That is suggesting lower price. Now, let's go take a look at CCIV. Let me get that fired up out here on my daily and my 30-minute time frame chart. And the question wasn't anything. It was just take a look at it. So let's go take a look at it a little bit further out here. CCIV, where's it headed to? At this stage of the game, a close today below 33.49, and you would need two closes. Let's not forget, you got to need a double close below 33.49. That's going to suggest you could pick this up at $10.03. Now, if that's going to take place out there, this is a gigantic haircut. You would not want to stay in on this trade, CCIV. On a 30-minute time frame, we're looking for some kind of bottoming signal out here. This formed a TD9 count pattern about an hour ago. The price level to watch is 30.31. You see it close below 30.31. It's on its merry way to the downside out here. So I would stay away from CCIV. It's below key level of support out there. A second close tomorrow is going to suggest that this is on sale, and you can pick it up at about a third of where it's printing right now. Let's go check out the email situation. We are about to go to a hard break. I do see something coming in from Rich, and Rich wants to take a look at CLNE. I think that's clean energy out here. CLNE fuels, and that's trading with inside its daily profile. Yesterday, hitting a key level of support, the bottom of its profile at 1197, and this week it's also tested the top of its weekly profile, 1231. Looking at this chart, we'll go take a look at my other charts out here, but it's pretty good. That is clean energy fuels. Steve Rhodes with TFNN. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Are you grinding in the market but seeing little to no return? Or are you a successful trader simply looking to make his job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month and try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. That Dow's up 439, S&P's up 45. So back to Rich's question. Clean Energy, CLNE is the ticker symbol, and you're debating whether to reduce your holdings because this is trading below the 21-day moving average. So the first thing that I'm going to suggest to you is don't. Now, that's just looking at these charts. We're going to look at all charts out here. We'll look at our white background charts and our black background. The reason that I say, because you held this through yesterday, and so the reason I'm saying no, don't jettison this position is because yesterday was a key test of support. That's at 1197. Yeah. So I mean, do what you want, but both the top of the weekly profile, brand new weekly profile this week, is held the bottom of the daily. We need to see some real clear signals that suggest that you should exit this position. So let's go take a look at the white background chart. What do we have? You've got a Rhodes Momentum Indicator top, but that took price right back down to support, that bottom of that profile out here. And if price can clear where it's trading right now, about 13.95, we'll move to 15.94, and above that all the way back to the highs would be its message on the weekly time frame. So its test of the downside could be over. Here we can see wave number 7 at the top, letter G. Price pulls back. Not only does it test the top of a new profile, it tests the green oscillator and change line. On a weekly basis, Rich, this is still in a bullish condition out here. On a monthly basis, what do we have? Monthly basis says, you know what, price ran a resistance at 1969, where it should have, the TD9 breakdown level. Okay, and now we've seen a couple of tests of support. So again, that is suggesting to stay with the position. We go to the 30-minute time frame, see if there's any kind of a signal out here for us on clean energy. There really isn't. So if you stuck with this trade through yesterday, I think you should continue to stick with the trade for the moment out there. And let's continue to monitor it. Right back to me if you see something unusual that takes place. But watch 1197. Close below 1197, certainly two close below 1197. That would say, okay, maybe time to get out. You also want to take a look at Tesla. TSLA is the ticker symbol. You're saying Kathy Wood is buying more, but you're not so sure. So let's try to figure out, why was Kathy buying more Tesla? Here, if we take a look at the daily time frame, we don't have an answer because Tesla's been below the bottom of its daily profile for the last 3 trading sessions. Price did get down towards support on a weekly basis. That's at the 599.75 area. It didn't get all the way down there, but it got close. So we don't see the signal here. Why was Kathy buying Tesla? Well, let's go look at our white background charts. Maybe they can assist us. So we pull this over, we open this up, and what is it that we see? We see that, Stevie, did I really do that? Son of a gun. I did. And when I say did I really do that, I deleted the entire, gosh dang it, the entire everything that I wanted. So let's go to this chart here. That's okay. Oh, man. It is what it is. Stevie's fat fingers. Okay, let's try this again. They really, you know how on the these, you open up a chart, you've got the little X on the very right side, and the expansion one to maximize is right next to it. What were those people smoking or drinking when they did that? I mean, really, what were they thinking? You don't think you would have maybe situated expansion, which is what somebody might do, is just simply exit it? Crush it. Okay, let's get back to the question here for Rich. Why was Kathy Wood buying? Well, I would only assume that Kathy was using the TD9 count breakout level. And if we take a look at Tesla, that's what it did yesterday. It moved all the way back to the TD9 breakout level at 655. That's after confirming a Rhodes Momentum Indicator top pattern. So Tesla, that's why she was doing it. You would need to see a close below 655. Two close below 655 to suggest lower price. Lower price could be 433, but you don't have that signal right now. On a weekly time frame, you've got a TD9 count top, price still holding support, ultimate support being 599.75, because below that would signal a move back to 40409. So, Rich, I think the answer, we've got the answer. We now know why anybody would consider buying Tesla, and that was because price pulled back to the breakout area, and that took place yesterday. You had one more request. I was to take a look at Mosaic. We'll put up the daily time frame chart out here, and as we look at Mosaic, it still looks bullish and wants to move higher. On a daily basis, it's negated its topping signal. It's trading above the top of its daily profile, 3105. You're in this, I would stay in Mosaic. At least that's what the daily time frame chart is communicating to you and I. So, Rich, thanks so much for writing in. Hope that helps you out, and have a great day. Marvin A. Marvin wants to take a look at Tilray, T-L-R-Y out there. You want to know if Tilray has bottomed for a swing trade. Let's go ahead and get it up on our black background charts too, TLRY, and see what it's done. So it's possible that yesterday was a bottom. The reason why we would suggest that is because price pulled back to the bottom of its daily profile, which also happens to be a bullish structured profile formed about 4 or 5 days ago. And that really becomes the buy point out there. Only two close below 2407 would have you exit the position. Now, it hasn't proven itself that it wants to run higher. It won't do that until you see it close about 2884. You're trading at 2695 as we speak. But let's pull over Tilray's other charts. Let's go see, was there anything associated with yesterday's low, such as a bottoming pattern, other than just pulling back to the breakout level? And the answer is no, there wasn't. I don't have one. But you got a hammer candle, you got a bullish structured profile out there, and Marvin, we're going to go with the answer is yes. Now, price is going to need to close above 32.28. 32.38. But that number, the 38, 37, 36, that's going to change as price moves up or down. We'll call it $33. It closed above $33 as this runs back to 57.46. So you've got a decent reward risk out here to go ahead and take the trade. You're using yesterday's hammer candle. You want to have a stop below that and its bullish structured profile. Now, if price did close below yesterday's hammer candle and you would ask me for an entry point, we would say it's 17.57. But we're not there right yet because yesterday's support area held. That's its signal. On a 30-minute basis, as price was moving down there yesterday, we didn't get any kind of a bottoming signal or anything along those lines. We don't have any kind of a breakout. In fact, if anything, what Tilray did was it stalled once it got to its breakout level. And that was at 27.97. Now, look, it used a lot of energy to get up there. The energy it used was a 30-minute TD9 count pattern, and prices backed off. So here's the cool thing on Tilray, Marvin. If you see two closes on a 30-minute basis above 27.97, you're going to get a short-term change in trend signal. You combine that with price pulling back to the bottom of a bullish structured profile yesterday. That's your signal. That's at least your reward risk signal to go ahead and take a position. So we're going to go with the answer, my friend, is yes, until proven otherwise. That was for Marvin A. Marvin, thanks so much for writing in. I hope that helps you out. We got Dan F. Dan F. wants to take a look at Workhorse, I believe. WKHS. I don't know if it's Workhorse, but, you got those ticker symbols. It sure sounds like a workhorse to me. But let's go see what it really is out there. It is Workhorse Group. You got to love it. I didn't actually know that, but it sure made sense. Workhorse Group, ooh, what happened to its horse yesterday? A horse was taken out behind the barn, and it was crushed. Yeah. Down yesterday was 78 million shares. What's the question? Looking for an entry into it. Looks like it finished a TD9 count. Is it valid? Well, we're going to answer that question as soon as we get back from this break. Steve Rhodes with TFNN. But it did hold a level of support. That was $13.18. That's its last bastion of hope. We'll be right back.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We're taking a look at ticker symbol WKHS for Dan F. And Dan's asking, hey, was there a TD9 count bottom? The answer is yes. Yesterday was bar number 9. It took place right at the breakout level of support, 1652 and 1680. But you're trading below that right now. Doesn't invalidate the pattern, but it's trading below a key level of support. So that just has me saying caution, Will Robinson. On a weekly basis out here, it pulled back to a breakout area, but the week's not over. 1455. If price closes below 1455, this wants to pull back even further. So I'd be patient at this stage here. The monthly time frame, big wide-ranging bar, gigantic, but price did hold support 1319. Dan, in order to take a trade on this, based upon that TD9 count pattern, I'd really want to see some type of bottoming signal and a level of resistance fail on the short-term time frames. The 15-minute time frame resistance that would need to fail is 1875. The 30-minute time frame that would need to fail is 1719. The 65-minute level that price would need to close above in order to generate a bullish signal would be 1887 out there. And at a minimum, you want to see price get back above 1652, and it's not there just yet. But to answer your question, did this form a TD9 count bottom? Absolutely. Great spotting on your part. It's just that wide-ranging bar from yesterday is dangerous. And that's not really how you want to see a pattern make a bottom. That doesn't mean that it didn't bottom. But if it did bottom, you'll see resistance levels on the short-term time frame fail. And we just don't have that as we speak right now. So, folks, thanks so much for joining us. There were a few questions, I believe, that came in from YouTube. We didn't get to those just simply because of a lack of time, not because we didn't want to. And looks like maybe one question from Susanna on the XLE. But I'll be happy to look at all of those instruments in the morning, tomorrow afternoon. But stay tuned, folks. You got 2 more great hours left, and I'll be back with you on Thursday, and terrific Thursday. But most importantly, have a wonderful Wednesday. Take care, folks.